Good evening, this is Nick Inman from VolumeProfileTrader.com on Saturday, February 25th, and looking at the market over the weekend, looking at a bunch of charts, dissecting what's gone on really since the October lows. What I'm really looking for is some type of pullback in the market, and I do believe that pullback will be a buying opportunity, but I don't see much as far as the risk reward to the upside. Right here, right now, short term, I do not think there's any reward to the upside. As far as broad base goes, now individual companies, that could be different, and there could be some outperformance relative and just in general. But I do think that this consolidation in the market that started over the last week, I do think it matters, and I do think it's going to lead to more downside. I would assume 13.25 would be the first downside target, followed by 13.10. And let's bring over the intraday chart to see what's going on. I'm just going to look at the last 2 months, and what we have is we do have some pretty decent volume forming right below 1360 on the S&P futures, which is good news. However, the majority of the volume is 1350 down to 1336 with an emphasis around 1340. So downside target would be to those levels. If I just draw a trend line since the beginning of the year, you can see definitely it's right to buy on the weakness, and we've had a successful test of the trend line to the top of the channel every single time, but every time that we hit the top of the channel, the likelihood of it coming back down to the bottom and then hitting the top at such a, really for the broad market at such a steep slope is eventually it's not going to work out. And I see that we didn't make a new high on Friday, and that really doesn't matter because it's going to the weekend, selling, people taking risk off. But I would assume, just guesstimating, if the S&P had to touch the top of this trend line again, it would probably be around 1380, 1385. And given that we're at the 1370 level, which was the original level, that was the 2011 highs, basically, a little shy of it, but close enough. There's probably going to be some psychological selling, short sellers stepping in with defined risk and looking for some downside. But like I said, I do think that this downside should be bought. So keep your buying list out, but realize that the risk reward on most names in general on the market is not there. NASDAQ, now obviously this has been a great performer because Salesforce helped it on Friday, but really this point of control had a high base in February and we pushed above it. Now what we want to see is this to continue. If it starts to drop below these recent swing lows, you would have to be suspect on this breakout and assume it's a fake out. But you can see how steep this trend is. It's bound for rest, and the NASDAQ could get thumped and pushed back down towards sub 2,500. So that could be a decent sized pullback for the NASDAQ. Alright, let's see, transportation. This is the ETF, but its job is to follow the transports average, but you can see we have huge volume right at this low 90 level, and we're struggling with it now. We have some high volume in at these levels, but nevertheless we're getting higher lows, higher highs. And what I really like is the intraday chart. We have February's point of control, January's point of control, both at the bottom end of the range. So we have good volume at these levels. So now all we're looking for is some type of stabilization in price. If we get that, we may get a shot to the long side on transports. Small caps consolidating. I don't think anything's wrong with this except for the fact that it's probably forming a top like the rest of the market. Looking at February's point of control, this is probably the most significant. Although, as I look at recent months, that really hasn't happened. But generally speaking, point of control at the top of the range, not top of the range, but like top of the month, usually signals some type of topping pattern. Like back in October, we got that topping pattern sell-off. And even in November, we had it, in general, the top end of the range sell-off. And then it kind of shifted. We had it top end of the range, we balanced, and we blasted off to new highs. Balanced, blasted off to new highs. Now it's, similar. Top of the range, are we going to blast off to new highs, or are we going to sell off? And I'm going with a sell-off. However, I'm not trying to make any assumptions. I'm going to let price action determine it. Realize we have an ECB meeting this week, which should give a catalyst for the market one way or the other. I should say for the currencies, for the euro. And it should help the risk-on trade, risk-off trade, whatever is going to happen. So now going into some stocks that we're looking at. Alpha Natural Resources, I sent out an email Friday saying don't take your eye off the ball. I sent that out. It was up 1%, closed the day up 3%. I am a complete believer that you can place your stop under Friday's intraday low. And if you get stopped, you get stopped. But I do think that you have a shot to the upside. And frankly, let me just draw it like this. Maybe we have a little triangle pattern forming. But so long as Friday's intraday low holds and we continue to push higher, I wouldn't be surprised if Alpha Natural Resources does push up towards this $28, $30 level and try to really make a move to the upside. If that's the case, you want to be long this name because it's a fast mover and you'll see nice gains. Chesapeake Energy, full disclosure, took all of my profits on my option positions. I sold half of them early in the morning on Friday, and then Chesapeake continued to rise, and it got pretty close to my $26 target, and I said, you know what, that's good enough going on a Friday. Even though these options expire in the summer, I'm totally okay with just owning shares now, and I actually sold the 27 April calls against my most of my long stock, and I received 75 cents in premium. So for about 2 months' time, collecting about 3% plus a potential upside of $1.50, so $2.25 of potential upside that I've tried to lock in going into April. I think that's a pretty good risk reward. I thought the premium justified selling it. So that was just my thoughts. Devon Energy looks good. Still nothing wrong with it. What I actually do like is that the point of control for February 4 is now at the top end of the range. That's good because at least you know that the majority of the volume's at the top end, leading you to believe that we're going to get a move one way or the other sooner rather than later on Devon Energy. Halliburton, similar to Chesapeake, I took my profits on my call options that expired, I want to say April. They were a double, so it was a good trade. Still own shares. About a third of a position. Would like to add on weakness, but not going to chase it this high up. Had a nice bounce off the 50-day, off the point of control. And, take your profits and wait to reload. ConocoPhillips, now this is a breakout, and I don't want you to miss it. Hopefully you've been long, because I know I'm long down towards the 69 range. And this continues to work. No reason to sell it, no reason to think that it's going to stop going up. I'd be looking at the value area high, $77 as a potential target. You're feel more than welcome to take profits up at these levels, but believe that any pullback, buyers are going to be anxious to get involved. And the reason why is because oil, I've said this a few times, but doesn't this oil chart kind of look like ConocoPhillips? I think it does. And that ConocoPhillips is a great way to play a rising oil market. Win up 1.5%, did well today, did well Friday relative to the rest of the market. I bought it on Thursday, so I'm up a little bit, but I'm really looking for a move back up towards 130, 135, and that's where I'll plan to take profits. But it's really just for, I don't want to say it's just for a trade, because it is at the bottom of the value area for the year. That's a positive, and I wouldn't be surprised to see it move up towards 140, maybe 150 if the market continues to be strong. Look at Las Vegas Sands. This continues to work. MGM, now this has taken a pause, but really, look at what went on at MGM. It balanced, and we had point of control at the bottom end of the range. And what did it do? It pushed back up to the top end of the range. Really no hesitation. So I'm looking for something similar with Wynn. Just a push back up towards the top end, really, of the value area, which is, the blue lines. It's bracketing 70% of the volume. And I'm looking for a move back up into this range. Similarly, with Amazon, let me get rid of these drawings. Looking for this to balance out and make a move back up towards the 200 level. What I really am looking at is the intraday. This is going to become the point of control soon for February. We have 3 or 4 trading days to determine if it will, but we have point of control from January and also the 90 days. So what that means to me is for the new year, we have pretty good volume at the bottom end of the range. So basically looking for a bounce at these levels. If we don't get a bounce, fine, take your loss. But what I like is Amazon going down on declining volume, and that's a positive. Look at the up days, much more powerful volume-wise than the down days. Just be aware of that, and be aware of the opportunity. Gold took a breather on Friday, down $11, but I don't think that this is the end of the uptrend. I think you look back down towards basically this range that we've been in between 1750, 1725. Watch it. If we get down to 1750, look for buyers. If we get down to 1730, 1720, look for buyers. And if we get a bounce, go with it. Because this, I do not think the gold trend is over whatsoever. Similarly with silver, took a breather on Friday, but I do think there's more upside in silver. It really just broke out on Thursday above the point of control for the year, so we're just looking for more follow-through. Also, the breakout was on pretty good volume, especially relative to what we've seen for the last, really for the last couple of months. So I don't think there's anything wrong with silver. American Express, right when you think that it's going to take a pause and start heading lower, up 1%, over 1%, I'm still own about half a position size on American Express. I still believe it's going to go higher, but I wish I could get it on, or reload the other half on weakness. But, for now it looks good. It looks like it's going to continue higher, and I don't see any reason to sell the rest of my shares. Peabody Energy, it kind of goes along with the Alpha Natural Resource trade, just another idea. It looks good for one reason, because it's holding in the middle end of the range. We've had basically a double bottom, and then from there we've had a higher base, and that is what we want to see. We have a little bit of selling pressure at the point of control for the last couple of weeks. That's fine. What I like here also is the intraday chart. You can see, let me zoom out one more. Let's see, this is December's point of control, major low. Blast off from those levels. We hold these lows. test it. Now we're trying to hold the point of control for January, February, and the last 3 months, the last 90 days. If we can do that, we should have no problem going up to test November's point of control, these recent swing highs, around $40. If that's the case, then there's some decent upside, $4 on a $36 stock. That's not too bad. And the last name I want to cover, Hewlett-Packard. I do think there's opportunity here. Don't take your eye off of this. What we're seeing is a pullback to the bottom of the channel. It is at the lows. It hasn't made new lows for the year, so that's a positive. We have great volume down at this 26 level, which is where we're trading right now. And there's really no volume. We have a little bit of volume up towards 28. You have a little bit of, I want my money back. But really, there's no volume until you get back up to the mid-30s. And that would be my potential target. $8 on a slow mover like Hewlett-Packard. What I'm really looking at is January's point of control. I do think that matters. Those were the lows on Friday. I think you can take a stab here, and you look for some type of support. If we start to get, any type of buyers at this level, go with it. Buy half a position, and then you can easily add on the way up, however you want to do it. But I do think there's upside potential for Hewlett-Packard. I would just kind of set it and forget it. Look for $34, $35, and then you can look to take profits there. But Hewlett-Packard, I do think it's an opportunity, so just something to be aware of. So overall, I think the potential for a pullback is there. And I look at the euro value area low for the year, probably a little bit of resistance, a little bit of selling pressure. But overall, there's no reason to sell yet, but be prepared for that potential. Unfortunately, that's, markets go up, markets go down. We've gone up for a long time, not for a long time, but for the last 3 or 4 months. There's probably people who are willing to sell up at this 1360 level. I'm sure a lot of professionals have taken some profits into strength with the expectations to reload at lower levels. So be aware that the market's had a nice ride, and don't be surprised for a move either way. However, have you ever seen, maybe you have, maybe the mid-90s, which I was not around to trade, but maybe you've seen a market which, has a nice 2 or 3 month run and then just keeps going for the next 3 months without any type of pullback even to the middle of the channel or the 50-day moving average, whatever, just keeps on going. I guess that's possible. The one thing I can think of is last year, we had 2 nice runs. We had the run, let's see, it was September to November, so about a 2-month run, which is the equivalent of what we've done here. And then you had, after a pullback, you had a, let's see, from the beginning of December up to, call it the mid of February. So you have about 2.5 months. We're creeping on that. You could have another 2 or 3 months of price appreciation, but even so, you had some shakeouts at these levels. The volume was pretty decent at those, on those sell days, whereas here the volume's pretty light even on the sell days. Something to be aware of. But overall, I think there's nothing wrong with this market. I think it'll continue higher, but expect the pullback. So anyways, take care, have a good night, and I will talk to you Monday.